Okay, hello traders, welcome back to the channel. Welcome back to another video. It's your boy San, and I'm going to be taking you through the analysis of this cryptocurrency. This is Ethereum USD, so I'm going to be taking you through a thorough analysis on Ethereum. So if you don't know how to analyze the Forex market, this video is for you. Come closer. If you don't know how to take your entries, you also come closer. If you're struggling with Forex, this should be the video that you're going to be needing, the only video that you're going to be needing on how to analyze the Forex market. I'm going to be going through a step-by-step A to Z format on how to do this. So sit tight and then learn with me. Also, we have we're remaining with around 30 people to make 1k subscribers, and then we can officially kick off our online classes for people who want to learn how to analyze the Forex market. Remember, they are going to be for free, so subscribe and be part of the channel. Also, I've already put a Telegram link in the description. You just check my bio, you'll see a link there. Click and then you'll be able to join the channel and be there. We wait for the rest of the colleagues, and then we can start the lessons. Just click the link in the bio, Telegram link in the bio, and then it's going to take you direct to that channel. So we shall be waiting for the rest of the team, and then I can start off with the lessons. So make sure you are part of that. People have been asking for the link. It is in my bio. Just click at the link and then it will be redirected. It will direct you to the Telegram channel. So you wait from there. I've done that because we are almost at 1,000 subscribers. So soon you're going to be kicking off the lesson. So make sure that before you join the channel, you are part of the subscribers. You have subscribed to the channel, and then you go to the Telegram group where the lessons are going to be conducted. So subscribe and then go and click the link in my bio. It will take you straight to the group. I created the group yesterday, so you people should be already joining. So I think I'll start from there. Don't forget to be part of the lessons. Just click the link and then join. So I'll start from there. So this is Ethereum USD, and this is a cryptocurrency. People trade cryptocurrencies. So I'm going. It works the same for as long as they are candlesticks. It works the same as Forex pairs. The only difference is that cryptocurrencies are so volatile, so you'll see a lot of wicks up and down. But the rest of the analysis and price movement, it is almost identical. So I'm just going to be going through it step by step. Okay, so what is the first thing you want to do? People who have been asking me, what should I do first when I go to the charts? What is that I have to look out? So what is the first thing you want to do? If you go to an empty chart, let's say it is a new chart. Let me do like this. Okay, let me just delete all these my markings, and then I remain with the chart like this. So let's say you have gone to your chart, and this is a new chart that you're looking at, and you want to analyze Ethereum and probably get your entries. So this is a chart. It is not showing you anything. 2-hour time frame. You're on a new chart and you don't know what to do. The first thing you want to do is you want to identify the market structures. How do you identify the market structures? The correct market structures, you're going to identify them on the highest time frame that you are willing to go to. I hope you get my point. You can get a book and write somewhere. You have to identify the market structure. That is the first thing you want to know. But how do you get the market structures? You get them on the highest time frame that you are willing to go to. What do I mean by the highest time frame you are willing to go to? We have people who are willing to go to the 1 hour as their highest time frame. So that means you want to identify your market structures on the 1 hour first. Then we have people who are willing to go to the 4 hour as their highest time frame. You have to identify the market structures on the 4 hour. Then we have people who are willing to use the daily, weekly, or monthly. So whichever time frame you're considering as your highest time frame, that is where you want to go first and identify your market structures from there. I hope we are together up to that. You want to go first. When you open the chart, it looks like this. This is a 2-hour time frame. You don't know what is happening. So the first thing you want to do, go to your highest time frame. What is the reason as to why you go to the highest time frame? You want to identify the market structure on the highest time frame, because the market always respects the structures on the highest time frame and it always trades towards them. So the first thing you want to do, open the chart and then go to the highest time frame. The second thing, identify the market structures on that highest time frame. Now, for example, for me, this is the 2-hour time frame. So when I open my chart like this, it is a new chart, clean chart. There is nothing on the chart. What I want to do is I go to my highest time frame, which is the monthly. So when I go to the monthly, I want to identify, one, the structures of the market on the monthly. Two, the direction of the market on the monthly. Okay. Why do I put the direction of the market as the second option besides the market structure? It is because the market structure is going to give you the direction of the market. We can look at the monthly right now. You can clearly see, according to the expression, the monthly is in a ranging format. There is nothing significant going on in terms of trend. Yes, someone would say this is an uptrend, but it is not the uptrend you just buy anyhow, because price is currently making equal highs. You see, this is an equal high, and then we have a similarly equal low, equal lows here. If this was to be a proper uptrend, we should be seeing a higher high, a higher low, and market was supposed to put in a higher high before it comes to put in a higher low. However, we saw a higher high here, and then we saw a higher low, and then we saw a lower high, an equal high, then we saw a higher low, an equal low, and then we put in an equal high from this previous high, which is a double top, and then price is like dropping. So this is not a market you would term as an uptrend market. However, you would be favoring more the buys than the sales, but it will depend on where we are, where you will be at that current market point, like I will show you soon. So this one is, to me, it is a ranging market on the monthly time frame. However, I know you've been told that when you're in the ranging market, you're not supposed to trade. That works only when you're on the lower time frames. But a ranging market on the high time frame, like monthly, weekly, even the daily, let's leave alone weekly and monthly. Look at the daily. If you have a ranging market on the daily, that means you'll mark out your support and resistance. So price will be moving in a range. Moves from support, goes to resistance, comes down to support, which is a range. By the time price moves from support to resistance, they will be around 100 pips. So you can trade that one. You don't necessarily need to leave a ranging market unless it is on the lower time frames, like 1 hour or 2 hour going below, because now that range is going to be only around 10 to 15 pips. So trading them, it is not going to give you a good risk to reward. So let's continue. So now you have gone to your highest time frame, the monthly. You have identified that the market is in ranging. So what are the structures? You want to identify the structures that the market has formed. That is what we call market structure. So you want to identify the structures that the market has formed. For me, in order to identify and stick with my structures, what I do is I mark them with support and resistances. You can do them with supply and demand or anything. But me, I mark them mostly with support and resistances, and also sometimes I consider supply and demand. So when I come to the monthly, I'm going to mark here. Why do I mark here? Because it is the first zone that is very visible. First zone that is very visible. That is what I'm going to mark. Make sure I mark it well, like that. Why? Because when I got the line chart, this is the last point that price has gone to and closed above this one here. So I mark it, and I'm expecting price to either come here, go through, or reject and drop. Good. So after marking that, which other point do I see? So I just copy this or clone, just clone this, and then I see a level here. I don't know whether you guys see a level here, but I can see it. If I got the line chart, you can see that price came here, made a higher low, and then made a QM pattern, then sold off from this level here. So there's a big sell from this level. It is a level you cannot ignore. So another level is down here. I'll just clone this and come to this one here. Maybe you guys cannot see it, but me, I can see it. Price made a resistance here, broke it and left demand here, rally base, rally broke demand here. Then price came to retest the resistance as support as well as demand and supply, and then shot up. This massive move to the upside cannot be ignored. So this is going to be a level. And also look, price came, made a rejection here, and then shot to the upside. So this massive moves to the upside cannot be rejected, cannot be ignored. So when you got the line chart, it is very clear. We used it as resistance broke, used it as support, and then shot up. Then came here to use this as support, the double top from here, and then shot to the upside. So you cannot ignore them. So now, having marked out like that, I don't normally want to mark a lot of things. Maximum I go to 3, but I consider 2 mainly. But maximum I go to 3. So having marked out your structures like this, now you have zones. What do I mean by zones? You know that when price is up here, if it rejects, it's likely to come down here. Good. And you know, if it is down here, if it rejects down here, it is likely to go back up here. You get the point. Like, we have zones where to trade from. So these zones are the ones that will determine the market direction for you on the lower time frame. If price is to move from here up to here, on the monthly it will be like 1, 2, 3 candles. But if you go on the daily or 4 hour, there will be a lot of candles. Like, it will be a whole trend. So you know that we have retested. This is a previous point where price sold massively. So when we come here, you're expecting sales, guys. When we come here, we're expecting sales. We are not only making a double top on the monthly time frame, we also give an indecision candle at that point. You're now expecting to start selling from this area, and when you're selling from this area, where are you going? You're heading to here. So how many pips are in between there? 950 pips, around 950 pips in between there. So you know that from here to here I have 900 pips. So just now plan accordingly. So you have marked your monthly structures very well. So now you know when you're going to trade, where are you going to be looking at. So what currently the monthly is doing is simple. If you come to the line chart, you see that this is a previous area that was broken. Price came, retested this previous higher high, made a double top and dropped to this level. So what you're thinking, or what should come to your mind first, is that we are coming to retest where we broke. This is the previous area that we broke. We are coming to retest where we broke here, and then probably go back to this area and see if we can break or we come down. I get the point. You get the point. We are coming to retest this area that we broke. So it is like a break and retest. So that is what is happening in the monthly time frame. So you build a narrative in the monthly time frame and you have your structures. What do you do next? You drop down to one time frame below. So when you come down to one time frame below, you want to see clarity, more structures and what you can get, more structures and what you can get. So when I come back the lower time frame, this is the weekly time frame. This is what I see. First of all, what strikes my eye is we have a demand zone at that level. Remember, this is a support level on the monthly time frame. And then we happen to have a demand zone on that support level, which is a rally, a base, a rally. 2 indecision candles, one whole engulfing candle. One whole engulfing candle. And then a great move away to the upside. There was, even after this candle, there was a jump. And even after this one, there was another jump. Retest into this demand zone until price made a higher high. So it looks like we are coming to retest this demand zone on the weekly time frame. For as well as we are testing the demand zone, we also have we also have this as our support level. So you have two confluences there. We have a demand zone and a support level. And also what I forgot to tell you is that on the weekly is where now we refine these zones, like there. But now this is where we made a double top, weekly double top, and then we started falling down. So I'll just adjust this one to where the high the price reached, and you see that now from here to here you'll be having like 1,000 pips waiting for you, because now I've adjusted. There you go, 1,000 pips. So you'll be risking around 1 to make 4, 1,000 pips there. So now we have finished to align that one. We know that we are likely to trade from here up to here. At least that is what the monthly is telling us. The monthly we have a break and retest. Then the weekly we have a demand zone, which also lies at the monthly support, and also the weekly resistance, which is turning into support. We are together. So support tells us to buy on the monthly, and monthly also showing us a break and retest. Then the weekly is showing us a demand zone at the support area. So even the weekly is suggesting that we might be likely to start buying here. So let me just refine this. You can just refine it, you can choose not to. That is totally relative to you. So the weekly is telling us we are likely to start buying because we have contacted the weekly demand zone, and then the support, weekly support, which is also a resistance on the weekly, which is also support on the weekly. Good. So now weekly, this is what it has to give us. So we shall drop one time frame lower, and I want to give you the direction of Ethereum before I can now go back to start analyzing these previous actions, that price action that happened. So I'm giving you the direction of the Ethereum first. So when we go to the daily, this is what we see, guys. On the daily, this is what you see. The daily, the demand zone is still there, very clean and clear. You can refine it up to there, very clean and clear. The demand zone is there. Now it has been contacted, and you see that huge daily rejection. Demand zone contacted, huge daily rejection. There was also liquidity here that was taken out with this rejection. So that is one of the confirmation that we might be heading back up here, back up to this level. On the daily time frame, we have contacted the daily demand. Look at the move away from that area. 1, 2, 3, 4, 5. 5 daily candles. That is almost a full week of previous price action or buying momentum. So now we have contacted the daily demand. As me, I would want to enter from here. See this rejection card, and I always tell you, the moment you contact support or demand, and then you give that indecision candle, chances of going up are high, or chances of turning out the direction of the market are high. So as me, I would like to enter from here. However, if I'm to enter from here, I'm risking 400 pips. That is not something I want to do. Risking 400 to make 800, that is not something I would want to do. However, if you look at it very well, you can clearly see that we have put in an indecision candle with a long wick to the upside. This is a doji with a long wick to the downside. So we expect this price action to start buying. At least we expect Ethereum to start buying up to here, or even go above. But we shall see what happens when we get here. So from monthly, weekly, daily, the narrative we have is for buys. Okay, so let us now proceed to the lower time frames now, 4 hour. So when I look at the 4 hour, this is what I see. We have contacted this daily and weekly demand zone, and look at the move away from that zone. We already short to the upside, which is a good thing. See if I could refine this any further. Always not want to refine things further. So that is how we've moved to the upside after contacting the daily demand, and also which happens to be the support zone on the weekly, monthly, and daily. So we have moved to the upside. So what do you want to see? Right now, it is hard to start buying. However, since we have contacted the weekly demand zone, so we are likely to head to the weekly resistance up here. Where is this arrow thing? This one here. So we are likely to move from here up to here. And this is Ethereum. So guys, watch out for Ethereum. We are likely to move from down here up to up here, starting from next week. So what we are going to be looking for is very simple. We are going to be looking for only demand zones, and we start buying on the lower time frames. So you want price to come and break this previous high, make a high, then use the demand zone that was used to break this previous high and start buying. Buy only demand zone until when we reach this zone. And when we reach this zone, you see there is a huge supply zone. Very good supply zone. See how many indecision candles? 1, 2, 3, 4, 5, and then one engulfing candle. So this is a very good supply zone. When we reach this zone, we shall be looking to sell a little bit, maybe before we can break or continue to the downside. However, Ethereum has confirmed that we are now into buying only. The trend has changed, and this is what I tell you guys. You see, when price came and contacted this daily resistance and price started dropping, this is what is happening here. We contact daily support and now we are going up. So immediately price started dropping. The confirmation was after price took out this zone here. Price dropped and took out this zone here. After making this lower low from here, you knew that now the next point was going to be here. So you had to start selling until you reached here. You're not going to buy this demand zone like this one here. Now people don't go to the high time frame. This is one of your problems. People would be looking to buy this demand zone. Of course, it is a very good demand zone. This is an indecision candle, a good engulfing candle, which is also break structure, and look at the move away. Very good demand zone. However, it was not going to hold. Why? Because price now had contacted the daily, the weekly resistance, and now it was going to the support. So there is no way we're going to respect the 4-hour demand zone. We shall just blow through it like that. So what you have to do is very simple. Start looking out for sell zones. So we had a sell zone here. Price did not come back to it, and sometimes price will not come back to your zones, which is okay. Don't have to force it. We had another one there. Price did not come back to it. We had another one here. Price did not come back to it. And what you have to know is sometimes, most of the times, when price is in a hyper downtrend where the trend is so strong, price is not going to reach your zones. It will come like here, but it will not reach. Now this was a very perfect zone that you'd want to trade from. After this big drop, this zone was going to react like magic, but price did not even reach there. Immediately it started falling. So we have also this one here. You see, price tried to reach there, immediately it started falling. It did not reach there. So there is only one zone that was contacted, and it is because the candle was huge. That is why it was contacted here. So as you were following, selling, there is only this zone that gave you sales. That's why you see people trade support and resistance. That's why I told you, if you see up to here, so this one you get a 1:3 after waiting for a very long time following price action. So that's why people who trade support and resistance, this is their advantage, because now for you would have entered here, put your stop losses slightly above here, and now price started dropping. As it dropping, you follow in with supply and demand, but still you remember you have an open position that you entered on support, on resistance, that you're selling up to support. Let me show you. So price entered here and gave you this engulfing candle. So you entered from there and put your stop losses slightly above, and that is around 29 pips, and you'll be targeting down here. That is 290 points, not 29. You'll be targeting down here, which is 760. That is 1:2.6. So after entering that position, because this engulfing candle acted as your confirmation, yes, it is far, but you knew that if price came back, it was likely to react from here and start dropping. It was not going to go up. So you have that big position, and now these are just follow-up position that you're entering because you're riding the trend. You know the trend is going to end from here. So just keep on selling. You don't buy any demand zone, however beautiful it can be. You don't buy it. Just keep on selling until when you reach the support zone. So you'd have gotten this one, the big one, and then this one here. Only two positions from there. Just follow the rules and procedures. You see the thing is going to work out for you. So now the same thing that happened with the trend there, this is how you know that now the trend has changed, because we have contacted the daily demand zone, we have contacted the weekly and monthly support area. So we are likely to change the trend and start going to the upside. So when we are going to the upside, what do we want to do? We want to buy only support zones. So we want to buy all the demand zones. So what you're going to be doing, just going to follow this price leg to the upside, buying only demand zone. You're not going to be selling this supply zones. They are not going to help you. Don't sell any supply zone here, because now the daily or weekly demand is in control. So what you want to do is to only buy demand zones. Buy demand zones until when we reach up there. So what you want to do in that price leg, all you want to do is to come and mark out your demand zones and buy those ones. Mark out your demand zones and buy those ones. Mark out your demand zones and buy those ones. Do not look to sell these resistance zones. They are called what? Supply zones. Do not look to sell these supply zones. You're going to be taken out. Now, for example, if you're selling this supply zone, price is just going to blow through it, come retest from the demand zone and go to the upside. I'm not going, this is what is going to happen exactly, but the picture is not going to be any different from this. It is going to look exactly like that. So you're not looking to sell those supply zones because they are not going to work. What you want to do is to buy these demand zone to the upside. Also, you remember the other big position that I told you, people who trade support and resistance. So for the support and resistance, guys, just wait for a little pullback here, buy, and then you'll be targeting the next resistance, which is here. That is 1,000 pips. You'll be targeting the next resistance for 1,000 pips, and then you start following in with these demand zones that are created. Buy until when you reach up there. So in that one leg, you would make around 2,000 pips. So I think that explanation has been thorough and clear. So what I'm going to do, I'm now going to go into previous price action that has already happened. Now, after giving you the direction of the market, I've told you Ethereum USD is going to be bullish starting from next week. We are going to be looking to only buy it, not sell. We're going to be looking to only that demand zone to buy Ethereum USD. On the lower time frame. So we shall continue from here. Let me go back to the monthly time frame. I've given you the direction of Ethereum USD. It's going to be bullish starting from next week, and we're buying up to around here. So then I didn't give you. So let's go to the monthly. Now what I want to teach you is I want to show you what I have explained to you, what is likely to happen and what has happened before. You see if you can relate it. So this was a double top. This was a double top on the monthly time frame. So we have another double top here. You see here, price came, made a high here, broke this previous higher low, dropped down here, and then made another high. But before we reached here, we had a monthly demand zone here. Let me just draw it, and I want to show you something that happened in that zone. So this is the monthly demand zone. Let me just refine it up to that. So price came, reacted from this demand zone, respected it, gave us two indecision candles in that demand zone, and then shot up to make a double top here. So before we go to this double top, I want us to look at what happened in this monthly demand zone in terms of the lower time frame. Let's say you marked out this demand zone very well, and you went down the lower time frame to see what happened here. So you come to the weekly and see When I come to the weekly, what do you see, guys? This is our monthly demand zone. I've marked today, I've come to the weekly. So the weekly, what do you see? The first thing you see, you're going to see that there is higher high, higher low, higher high, higher low, higher high, retested on the higher low, and then went up. So this is a resistance zone that was broken, that turned into support on the weekly time frame. If you come to the line chart, you're going to see it very clearly. Let me just put there a line. You see that line? This is resistance broken, turns into support, and then price went up. So you want price to come back to this zone, and then you look for your buys. I hope you are clear up to that. So that is what happened here. And this is monthly demand zone. But on the weekly, you have support being broken, turns into resistance, and price shoots up, leaving for you a demand zone again there. You see, that is the weekly. A demand zone that also has support and resistance. That is the weekly. Now, I want you to concentrate at this area here. Concentrate at this area here. What do you see? This is a low, a lower high, a lower low, lower high, lower low, equal high, equal low, and then price starts going up. Does this look like something you know, guys? Let me put the line chart. Do you see an inverted head and shoulder here, guys? Do you see an inverted head and shoulder here? This is a weekly time frame having a head and shoulder. You know what that means? Price is going to shoot up like nothing. Weekly time frame giving you an inverted head and shoulder. You see that? Good. Now, I'm going to drop down to the lower time frame like the daily. You see, the monthly told us this is a monthly demand zone. We are likely to buy. The weekly comes and then builds an inverted head and shoulder in the monthly demand zone, guys, where there is also support and resistance. For me, I see that one as a sign of buy. So when I come to the daily, I want you to see what happens on the daily. So when I come to the daily, this is what I see. You see that price made a low, a lower high, a lower low, equal high, lower low, equal high, and not lower low, higher low, equal high, higher low, and then price went to the upside. Now, on the daily, I want you to see that this is a head and shoulder. Let me just mark it with this, my blue bar here. This one here. This is a head and shoulder. Remember, on the weekly, there is a head and shoulder. On the daily, there is also a left shoulder, a head, and price came to make another right shoulder. But I want you to see something. There is a demand zone here. This is a drop, a rally, a base, a rally. There is a demand zone on the right shoulder. So meaning, when price came and tapped into this demand zone, you're looking for only buys. And what was your first target? Up here. So this was your entry, like this. And then your first target was up here. That is 300 pips, and you're risking, that is 1:2, you're risking around 110 to make 300. You're missing 10 pips to make 30. So it would be on you. But this was a sure trade, because the weekly is in the demand zone. The weekly is making a head and shoulder. The monthly demand zone, support and resistance. There are a lot of confluences to show you that we are buying this pair. There was no reason for you to sell here. So after price tapped this zone, and then this was a daily resistance, mini daily resistance, and then dropped down on still. When it dropped down, let me show you. Price kept on leaving demand zones. This was a demand zone that price reacted from to go up. When it dropped down, there was a drop base rally. When it dropped down, there was a demand zone here again that price reacted from, as well as support. Because now, if I draw my support and resistances like this, resistance, 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 resistance. So support, 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 support. So price dropped here and then bought to the upside, reaching into on this resistance, and gave you an indecision candle, which was a likely sign that it will sell. So it started selling, retraced a little bit, and sold back to this demand zone, which also acted as a support. And you know, when we come to support, we buy. When we reach a demand, we buy. Again, this is the right shoulder. On the right shoulder, what do? It is a support area, so we buy. Very many reasons for buy. Price bought, and at this time, when it reached here, there was no indecision candle, meaning the buying momentum was still strong. So you had to wait the next day. It broke through after breaking through, you just knew it was going to the upside. So that is one scenario. I hope you have followed. And guys, just go and follow this analysis very well. It's going to give you clear insights on how to analyze the forex market. You see, I use that analysis for forex, but you see how it is working magic on crypto. So the first thing you want to see is this is a support area, a demand area. But when you go from the monthly, but you would go on the weekly, you see a support and resistance area, demand, and also you see an inverted weekly head and shoulder. Sometimes you'll have to wait for that inverted head and shoulder to form. That's why they always tell you forex is a game of patience. And when you go to the daily, you see a clear head and shoulder with a lot of demand and supply areas with support and resistance. This shows you that we are going to buy. So that was for that area. Now, do you see something like that on the right hand side of this price action? Do you guys see this? When I got the line chart, do you see this is a left shoulder, this is a head, this is like a demand zone where a right shoulder is likely to be. So if we buy from here up to here, we are likely to drop and break through here to come and make a right shoulder here and then proceed to the upside. I know it looks like awkward, but let's just follow price and see what it will do. This is a demand zone here. When I go to the weekly, some monthly demand zone, rally based rally. When I go to the weekly, you see it is even very clear. On the weekly, it is very clear. This is where price reacted previously. So we have a demand zone here. Price is going to react and go upside. If it doesn't break here, we just look for a retest. This is where it will be coming. But chances of going up, I see them, they are very high. So if I got the daily, what else do I see here? Price made like an inverted head and shoulder. Yeah, it was there, but it was not clear. But it is a demand zone definitely here. So we shall wait price to come there in the near future, but not now. So I wanted to show you that just to highlight that. Let's continue. So what do we have here? We have price that was making a higher high, not a higher high. This is the resistance. Price came down, broke the resistance, and left here demand zone. So I want to see what was in this demand zone, because this is looking like a break and retest. Go to line chart. Always use the line chart, guys, if you want precision. This is resistance. Price then came down and broke out of resistance to retest on it and then go to the upside. So that is a strong zone. So I'll just mark the demand zone that I see here, which is a rally base rally zone. This is the demand zone that I see there. So after marking my zone, and also there is support, that resistance that turned into support. So after marking my zone there, that is the monthly zone. We want to go to the weekly and see what happened there. So drop down to the weekly, and you see, guys, this is capable because I marked out my structures very well. So I go down to the weekly. So when I go to the weekly, what do I see? You're going to learn how to analyze the market by force. When I go to the weekly, what do I see? You see this area where we have support and resistance here. We have a very clean demand zone on the weekly time frame. Let me just mark it well, like that. Good. So we have a very clean demand zone on the weekly time frame. You see that price used here as resistance, and then came down, then used it as support, and then broke out. So after the breakout happening, all you want is a retest. This is a weekly time frame, guys. So you're looking for a retest. So price ranged a little bit here, then came down to hit the retest. After hitting the retest, it gave you very many weekly indecision candles. 1, 2, 3, 4, 5, 6, 7, 8. So price gave you 2 months of indecision candles before it decided to massively buy to the upside. But it was retesting this demand zone, which has drop, base, rally, breaking the previous 2 structures after this weekly engulfing candle. This candle is a weekly candle engulfed 3 previous 1, 2, 3 weekly candles, showing you that at this point here there is a lot of buying momentum. Are we together? So here, if you entered from here, you would have waited for almost 2 months for price action to move to the upside. But after it broke out, it moved around how many months? Very many months, around 3 months of bullish price action. So the weekly also tells you there is a demand zone and we are likely to buy to the upside. So let's go to the daily and see. So this is our area on the daily time frame. This is how it looks like. So the weekly gave you that. The weekly gave you that demand zone. This is what you see on the daily. Clear demand zone. Look at the buy momentum here. Clear demand zone. And also on the daily, you could see something like an inverted head and shoulder. How do you see that? Just mark out this right shoulder like this. But this one was not, price did not tap there. Right shoulder, this is right shoulder, this is like a head, and then price it ranged for weeks until when it came to retest on the right shoulder, did not reach there very well, and then retested again. This seems like a double bottom, because after ranging here a little bit, came to retest again before it started going up. So after you see this one here, price starts to range, comes back down to retest here, you go now down to the lower time frame. This is the only time you got a lower time frame, after you see this price action here on the daily. Now you drop down to the 4 hour, 2 hour, 1 hour to start looking for your buy entries, because the monthly and the weekly have told you we are going to buy. So just go down to the lower time frame to start looking for buy entries. So what I'm going to do, I'll highlight this area and then I drop down to the lower time frames. Let me just highlight this area like this. Then I drop down to the lower time frame and see if we can see any opportunities that appeared there. You see, this is the only time you go down to the lower time frame, because there are a lot of candles on the lower time frame. So on the lower time frame, it was clear we had a head and shoulder, an inverted head and shoulder. I'll just mark it like that. So that was the lower time frame. We had the inverted head and shoulder on the 4 hour. So you would use this to buy. If you don't see it, it is very clear here. So on the 4 hour, we had an inverted head and shoulder. So you'll take your entries on the right shoulder. Take your entries on the right shoulder. You could enter from here, but your stop losses had to be below here, or enter from here anywhere and wait. So I would enter from here, and then stop losses should be below there. That is around 48 pips. Good. So 48 pips, price retraced a little bit and then shot up. So when you enter from there, and price gave you an entry here, but this one, if you didn't put your stop losses slightly below here, you're going to be stopped out by this move. After getting some profits, you're going to be stopped out by this move. So when I come to the daily, this is what I see. This is what I see. Stop losses slightly below, and now you had to ride this trend. You're going to risk only 45 pips to make very many pips, guys. Very many pips. Very many pips. Let me just go to the weekly, because you did your analysis from the monthly, and that means you're going to ride the trend for a long period of time. So your level target would be here. So you'd risk, this is 1:38. This is more than even the alchemist. So you would get 1,880 pips after risking only 45, but that would have been done with the analysis that you made on the monthly down to the 4 hour time frame, and a lot of patience. It had to take a lot of patience. So let me show you one more thing before I proceed. So now let's go back to the monthly. I told you when you come to the chart, you want to go back to the monthly and see where price action is and start looking for your structures. Then after mapping out your structures, you will know where the direction is heading. So now when you come back to the monthly time frame, this is where we want to look at, because after price retesting here and buying so massively to the upside, and now price has retest to come back down here. We did not look into this double top. Let's first look into this double top before we come back down here. So after price making high, low, higher, high, lower, low, that is a QM pattern. You wait that if price comes back to this area, it is likely to sell down here and break this previous low, because that is a QM pattern. A QM pattern is a reversal pattern. This is high, low, lower, low. So if price comes back here, it is likely to sell. So what you do, remember this is the monthly time frame. So what you do is you wait for price, because it reacted into this demand zone like we saw and gave us a weekly head and shoulder, so it was likely to come here. So if price comes here, this is your take profit. After price has reached here, now this is a resistance zone. You want to look into that resistance zone and see that area. What happens? Are we continuing up or we are likely to sell? So I'll just mark this zone very well like this and drop down to the lower time frame, that is weekly, to see more structures. So this is our zone that we marked. So when price came here on the weekly, it was making a triple top. This is 1, 2, 3. So on the weekly, it was making a triple top. So what you waited to see on the weekly is an indecision candle of any nature, and we saw this. This is a hanging man. This is a hanging man or a bullish hammer. But when you see it at resistance, it shows weakness in the current trend, which was the bullish or the uptrend. You see, this was the head and shoulder that brought us here. So now when you see this indecision candle here, that is your sign that we are likely to start dropping. Then remember, the monthly it is a double top, on the weekly it is a triple top, and now we see indecision candles there. So you come to the daily. You come to the daily and see. You see the daily made even a double top. This was one top, reacted from this demand zone, and then failed to break this high, which is a failed high. After making a failed high, it gave us this drop here. Now after this drop, this is your confirmation, because we have broken this previous low. This is a demand zone. Price reacted from it and failed to make another high, which indicates weakness in the sellers. Then price dropped down here. After dropping, you just waited for a retracement into a supply zone, which is here. This is a hidden supply zone. Open, close. I'll show you when you go to the lower time frames. You just waited for a retracement into a supply zone, and then we start selling. Okay, so now this is the daily time frame. So after price reached here and gave you an indecision candle in the hidden supply zone, you just know it was going down. So you come to the 4 hour. The things happen, guys, but you have to be patient. You have to be patient. If you're not patient, you're always going to miss out on them. So if I come to the 4 hour, this is what happens. You see the supply zone? It's very clear. Drop, base, drop. And then mark it very well like this. Good. So price came and then played around, went through the zone, gave a rejection. After price going through the zone and giving a rejection, that would be your confirmation. But for me, I would not wait for that, because I don't know what would happen. So I'll just enter from there and put my stop losses slightly near this another supply zone here, just in case it goes through this, it will react from that. And then your target now should go back to the weekly zone. Your target should go back to the weekly zone. So you see, you would enter from here, and where is going to be your target? Your first target is going to be here, the previous shoulder of this head and shoulder. First target is going to be there. That is 1:4, 1,1600 pips. And then if you could hold it for longer, it later dropped up to the previous support, which is 2,000 pips. You see, guys, that is how you do your top-down analysis combined with support and resistance and supply and demand. That is why we call it the tricon strategy. So the last one I want to give you is this area here. And that's why I told you you have to trade from zone to zone. Go to your high time frame, mark out your structures very well, and then see the zone that price is likely to be trading from. That's how you avoid not being clear about where the market is going, because as you are on the charts, you know that currently we're at a monthly or weekly support level, so we are likely to start buying. So just look out for reasons to start buying. So now price dropped after reacting on this double top, dropped up to the previous monthly support zone, because this was used as support, broken out, used that resistance, broken out, used as support, and then price shot up. So when we come here, you just know we are likely to shoot up, because this is where the previous buyers took a lot of momentum to start buying to the upside. And I'm really happy with this Ethereum, because the way it is respecting these structures is so good. So when price comes back to this area, what you want to see on the monthly is any sign that we might be buying, and that sign has to be any indecision candle at support. I always tell you this. You see, this was used as resistance. There was an indecision candle here. Price broke out, came back to use at support as support, and then it gave us this indecision candle. This is a bullish hammer, gave us the indecision candle and shot up. So if it comes back here, it is likely to give us an indecision candle of any nature before it starts buying to the upside. If it doesn't, chances are high it will continue to go to the downside, and it will just blow through this. Then when we came here at the demand zone, you saw two indecision candles before price started going up. So when we came here at the resistance, you saw this 50% and this indecision candle before price started going down. So now we have come back to the previous support. You want to see a monthly indecision candle before you can start going to the upside. Sometimes it will not give you an indecision candle, it will give you like an engulfing candle, which is also good because it is the best confirmation. However, the engulfing candle, the problem with it is that when it gives an engulfing candle, it will follow through with another bullish candle, which is not going to give you proper entries with good stop losses. So you want to see an indecision candle. So when price reached on this level, it gave us this indecision candle you see here. This is a monthly indecision candle. This is something like a doji, a dragonfly. No, this is a doji, but it is in the monthly time frame. So after this indecision candle, monthly candle has closed, you wait for it to close. After it has closed, that is now when you start looking for your entries on the lower time frame. So after this monthly indecision candle has closed, you'll come to the weekly. So when you come to the weekly, what do you see? When you come to the weekly, it is simple. You will see this was an indecision candle, then this candle, then another indecision candle on the weekly. You see this indecision candle doji here, and then price went up. So after showing the bullish candle, I want you to observe this area very carefully. This is a morning star candlestick pattern. Let me stretch this one down. This is a morning star candlestick pattern. If you guys have studied about morning star of candlestick patterns, morning star, evening stars, this is a morning star candlestick pattern. If it happens at a place of resistance, as a place of support, you just know price is likely to change. So the monthly has given you an indecision candle with a huge wick to the downside, which is a doji, and then the weekly clearly prints a morning star, a red candle followed by an indecision candle and a green candle. This is a reversal candlestick pattern if it happens at a place of supply and demand or support and resistance, but in this case it's happening at a place of support on the monthly time frame, meaning it is likely to turn price around. So the moment you see this is your first confirmation that price is going to reverse. In fact, this is not a first, this is the confirmation that you need. It is on the weekly time frame, guys. This is a confirmation that price is going to reverse. So if you see it, if you have enough capital, you can just enter from here, put stop losses below. If you don't have, you should be looking out for demand zones to buy to the upside. So the weekly has this. So now I'll go to the daily. So when I come to the daily, what do you see? If you have been following the video very well, you are able to identify this structure. This is an inverted head and shoulder, if you have been following the video. So the daily printed the inverted head and shoulder. The monthly gave us a doji. with a huge wick to the downside, showing weakness in the sellers. The weekly gave us a morning star candlestick pattern. The daily has given us a head and shoulder, inverted head and shoulder. So where do you take your entries? On the left shoulder, on the right shoulder. This is where you take your entries, and you would have taken your entries around here. Price ranged for days, then started shooting to the upside. So the daily has given us an inverted head and shoulder. Good. Then you come to the 4-hour. Now this is where most of you guys want. Where is it? It is down here. You see, even the 4-hour, the head and shoulder is still there. Very clear cut. Head and shoulder, it is still there on the 4-hour. So your entries should be, there was a head and shoulder also down here. This is a low, a high, lower low, higher high. This is a QM pattern. The 4-hour price came to retest here. There was one entry here. You would enter here, price ranged a little bit and then went up. After breaking this previous structure, gave you this is a daily head and shoulder. You enter, put your stop losses slightly below, like this. Let's say you entered from here. Put your stop loss slightly below this demand zone there. This is around 90 pips. And guys, it is so easy to identify the things if you're looking into previous price action. Why? Because you don't need to be patient and wait for these candles to form. However, if you're in the current price action, it is going to be hard if you don't know what you're doing, or if you have not learned the things, because trying to wait, you see, this is a low, a high, lower low, higher high. You got the line chart. This is a QM pattern, low, high, lower low, higher high. So trying to wait for price to come back here and you enter from this demand zone and start buying, it is going to be hard, because if you see this strength of price coming back, you fear to enter, because you'll think, hey, with a lot of this momentum, price is just going to blow through and continue to the downside. This is a monthly support. There is no way 4-hour is going to blow to the downside after making a QM this area. So you knew price was going to buy, and this is what I always tell you. You see this supply zone here, it was very, very clean supply zone, very clean, and it gave a little bit reaction. This is a supply zone you wouldn't be looking to sell from. Why? Because price has contacted the monthly support area. So what you only want to do is look for demand zones and keep on buying. Buy only demand zones, buy only demand zone. Look for your break of structures and then keep on buying only demand zone to the upside. If you do not buy demand zones, you're going to be blown out. So there was this one here, because price had contacted the monthly support. There is no way you're looking to sell to where. So there is this one here. There's this one here. Price broke structure here, retraced, tapped into the zone, then start buying. This one was not going to hold, despite the fact that it was good, because we had contacted a monthly support, so you're likely to go up. This one was not going to hold. You're not looking to buy to sell any supply zones in this area. So after giving you a QM pattern on the 4-hour, that was also another confirmation that price was likely to continue buying to the upside. So you'd enter from there and then start riding the trend on the daily time frame. Why is it? That's the daily head and shoulder, and look at how price moved. Your first level target would be here, but price even broke that level. Like that. That is 2000 pips. 1:29. 1:29. So 1:29 is so huge, but you'd hold this for many days. 1, 2, 3, then a lot of days ranging, and then broke out the range and then went up to there. It did not stop there, ranged a little bit and then shot up to the upside. That is how many pips? 3000 pips. That is 1:43. I don't think anyone can hold the trade up to 1:43. I don't see anyone holding a trade up to there. However, it is just a breakdown on what you should expect. One, you should know the structures of the market. Know the double tops, double bottoms, triple tops, and then triple bottoms. Also know about the head and shoulder and inverted head and shoulder. After you have known that, Now it is going to be easier for you, because if you go to the highest time frame, that is the monthly, and observe structures that are there, then come back down to the weekly, you'll see a structure that you have seen which supports what is on the monthly. Come back to the daily, like that. That is how you get your trades, how you build your narrative on whether to buy or sell. Also, it is going to help you, because as you have entered here and you know that we are now looking for only buys, this is the main position that you have entered. You're going now to drop down to the 1 hour, 2 hour, 4 hour to start buying with that trend, because you know the trend is bullish until we reach here. So you just only look out for demand zones and you continue buying until when you reach the weekly resistance or monthly resistance zone. Before you do that, it is all buys all the way. So you just continue buying until when you reach there. So the recap the recount of what we have started today. 1, you want to go to the highest time frame and identify the structures. After identifying the structures, mark out them very well. Mark your support and resistances very well, or demand and supply zones very well on the highest time frame. After, you want to know where the price is currently. That is it at support or resistance? If it is at support, monthly or weekly support, then you're likely to head to resistance. So currently you see that the price was at the weekly demand zone and the daily support, so we are likely to head here. So what you do is you want to look for only demand zones on the lower time frames, like 1 hour, 2 hour, to start buying to the current resistance. Then you would not be required to sell any supply zones in that level until you hit the daily or weekly resistance zones. We just keep on buying until we reach a daily or weekly resistance zone. If you have not reached there, there is no need to sell any lower time frame supply zone, because you're going to be stopped out so easily. You'll be trading against the trend. So the last thing you want to do is identify and learn about chart patterns. For example, the head and shoulder, inverted head and shoulder, double tops, double bottoms. Also triple tops sometimes, but I don't consider them, because if price is retesting one area for a long period of time, that area sometimes is likely to break. So double bottom is the best, or double top. And also head and shoulder, inverted head and shoulder. After you have seen them, like for example, a head and shoulder on the weekly and the daily, it is 90% sure that it is going to work out. You can literally be looking out for only head and shoulders on the weekly or daily to take your entries. Okay guys, so I think that is all for today. It has been a long video, but hope it has been so valuable to you. Subscribe to the channel and also go to my bio. You'll see the link to the Telegram channel. That is what we are going to be using for studying how to analyze the market. So you can click on that link and it will take you to our Telegram channel, as we are on the road to 1,000 subscribers. So subscribe to the channel and also don't forget to like the video. That is all for today. Have a great day.